Hey, what's up everybody? It's that time again for another Monday market analysis. Today is April 20th, 2015. We're starting off by looking at the ES, and the 24 hours worth of data chart doesn't give us the whole story in this case. Today, Monday being this green bar here, it looks as though we have an encompassing candle, an inside day, but really if we look at the extended hours turned off, we can see that we did break Friday's highs. Now we are at a smaller daily long, the larger daily long being the 2039s that have a target above us at 2155s. And so using trading hours only, that's how we've come up with this double bottom here, and we've drawn from lows to highs. That gives us the next setup at 2070s with a target at 2121s. Now, if I go to a smaller time frame, and I'm going to turn 24 hours of data back on, I got a 5-minute chart, and we're looking at Friday, where we came down and touched to the tick the 2070. Actually, the entry was 2071.25s, and we came down here on Friday, touched that, and had a small bounce, but that was not able to hold. And you can see after the in the afternoon, after the trading session kind of had some time to settle out a little bit, we did come down here and break into the 2070s. So that initial long at 2071.25s was taken out. Now, because, if we look at taking another setup here, trying to get in on the traditional 50% retracement, we haven't had a retracement pullback yet. So essentially, the next long for tomorrow that we'll be looking at is 2081s. If we open up higher, we'll just extend this anchor point higher. In the smaller spectrum of things, there were a few opportunities to get in that were in the overnight session from the extension high to high. And keep in mind, we're coming off of a daily long, and to immediately go into an extension is, a little bit cause for alarm. So we went highs to highs once. The second time didn't come all the way back. We were about a couple ticks off. The third touch did come down and touch to the tick. And now the extension up here at 2087s would be the next long entry. But because we've gone from a daily long and then immediately into extensions, I'm going to be a little bit more cautious and say, let's come back to a full 50% retracement at 2081s. If we go back out to the daily chart, and I'm just going to go back to trading hours only, you can see that a long would, it's a smaller setup within the larger daily than the smaller daily, and then a next 50% retracement would be pretty small again. But when we get these smaller daily setups, or smaller setups that are visible on the 15-minute chart, all kind of lining up, that's when we can really get that pop. So we got a big setup, a smaller setup, and then a third setup that's just a little bit smaller than that. That's when we can have that momentum where all the time frames are aligned and they can really just explode. So we're looking to take out this swing high, and so in doing so, making a retracement to get some folks perhaps shaken out of the trades that they're in, at which point then new buyers can come in around that 2080 level and take us to new highs. If we look at some of the stocks that are out there, like the big names, Google, Amazon, all kind of making the same breakout formation today. Apple was another one, broke the prior day's high. And then if we look at the longer, the indices, if we look at the SPY, kind of just, moving sideways. The Dow is basically identical. The NASDAQ, almost the same thing. But take a look at the Russell, the small cap, making highs once, twice, three times, whereas the S&P was making double tops, and essentially this high was a little bit lower than the previous high. So the Russell is typically the market that kind of leads us out of the sideways consolidation levels. So the fact that stocks like Apple and Google are starting to put in these big candles, if we can just break these swing highs, and stocks like Google, same thing, breaking this downtrend, start to take out some of these swing highs, we might be able to see that momentum when it comes back to the ES and the S&P. So looking for a daily long that's a little bit smaller, visible on the 15-minute chart, to take out this swing high. In the meantime, we've got tons of support below us, and the flip side of that scenario is if we trade at 2081s, get a bounce, and then start failing, breaking through these 61.8s, now you have people who are long from 2040s, long from 2070s, long from 2080s, all different groups of people, most of which who have hard stops set. When we start breaking these 61.8s, and if we start breaking swing lows, now all of a sudden you have selling, compounded with more selling, and that's when you get these big body candles that are typically to the downside, where it's more fear setting in or stops being hit. So, a large movement, I think, is in store in one direction or another. At this point, it looks like it's going to be a breakout. But as always, we want to look at the current scenario, what we think is most likely, but also, the flip side, what is maybe not most likely. And, sometimes those scenarios, those unexpected scenarios, are the ones that, happen just by virtue that everyone is anticipating the most obvious thing to happen. So you always want to look at both sides of the spectrum and have a plan for whichever way the market goes. You can't sit there and say, well, this is what the market is going to do, but you can have a plan for if the market goes one way or another. So we're looking at along at 2081s, and if we get that bounce, get that target up to 2105s and break the swing high, then we'll look for the next setup, the next 50% retracement to take us to the larger 2070 entry to target, which is 2021s, which again, breaking the prior swing high. And so that scenario on a smaller time frame just is more magnified in the larger time frame. So the same concepts that you're using on the 512 or the 5-minute or the 15-minute just transfer all the way through to the daily chart. So that's what we're taking a look at for this week. We will talk to you in a couple of days. If you have questions, shoot me an email, and I will talk to you then. Thanks a lot.